Okay, everyone. Welcome to our Briefing Trader webinar. Topic today will be, it's a simple webinar on some tips and on how to develop a daily workflow that helps you to identify trading opportunities and investing opportunities on the Briefing Trader service. My name is Brett Ames. I head the sales department here. I'll be hosting the call and introducing our analysts, Brett Manning, Damon Southward, Scott Smith. We'll talk about their ideas and their work on the site and how to profit from it. I'll talk about how to use the site itself and navigate around it to find those ideas quickly that match your style and approach. So now you should be seeing dual in-play on the Briefing Trader service. This is the default page that you'll go to when you log in to Trader. It contains a constant stream of market coverage, news, earnings, analysts, upgrades, downgrades, rumors, economic events, but also the yellow highlighted comments are our trading ideas, the premium content from our senior analysts on ideas and calls on trades during the day and also swing trades. But we would recommend that before you dive into the stream of live in-play when you log into the service in the morning, that you go to the Investing and Trading tab to some of our research reports that are more static in nature and provide more in-depth analysis on identifying ideas that you can then go back to the live in-play page and get into and then identify ideas there. And I'm going to start with ETF Daily Notes, which you can use the drop-down button menu to access it this way, or if you click on Investing and Trading, you can go here, the splash page where all links are to all the reports, and click on ETF Daily Notes. So this is how you access the page. You can also bookmark it. You can use quick links over here to add this page to quick links. If I add this page to quick links, it'll then be there. So you can use this drop-down menu to access ETF Daily Notes. You can also sign up for email alerts to send you an email when this page is updated. But we'll get into email alerts later. What we're going to do now is I'm going to hand it off to Brett Manning, who trades under the custom ticker Chart. Chart is one of our, I'll get into custom tickers later if you're not familiar with them already. I'll hand it over to Brett.
Thank you very much, Brett. Okay, guys, let me start off here. I come at this from, first off, my name is Brett Manning, and I trade on the site under the name ChartTrader, and I use the tickers Chart and ETFXX, as you see at the top of the screen. Now, we're going to start off today with me, which means we're starting off with more of a top-down macro angle on the markets. When I hand it off to these other two guys, you're going to see mostly the opposite end of the spectrum, more of a bottom-up approach. So the vehicle that I generally choose to trade with from this macro perspective is futures markets. However, pretty much everything that I do, you can do with an ETF as well. And we can get into that in a bit, particularly if you want to talk about it afterwards one-on-one, or you can send questions in. But I'll generally post every trade that I do in the form of both futures and an ETF. But if you're unfamiliar with futures markets, they're really, not as intimidating as you may think. They seem like an exotic market. But for instance, I've done a nearly hour-long webinar on our Briefing YouTube channel, which is briefing.tv. If you search that, if you search YouTube for that, you will see all the webinars. The one entitled Introduction to Futures Trading will take you through basically everything you need to know to get started there. And I guess the big point I'd want to make here is that a lot of people come into this game thinking that the only way to really be successful at it is to pretty much find some unknown $5 stock, buy it, and sell it after it triples. And that's really the only way to make money in this game. And, what I would like to convince you of and show you how to do is you can triple a $30,000 account on a small move higher in interest rates. You can make a ton if you start to see and understand the basics of the crude oil market or currency markets or different commodities. We had some huge trades last year in gold, in copper, and again, I'll place all of these trades on the site in a very detailed and specific way with entry prices, exit prices, stop loss placement. And here are a few examples, and these examples don't in any way, it's not my intention to suggest that every trade I'm going to put up is going to have this kind of result, but here are a few good results, and my losses are generally extremely small. I trade with tight stops, and I generally increase size if something's working. So, I just want to take in that direction here as we start things today. And the way to follow what I do, I generally segment my activity into two kind of streams of interest. One would be the analysis side, and this is where you'll find the ETFXX ticker stuff. And there's two main publications there. There's every morning, about 15 minutes before the bell, the page that Brett Ames just showed you, the ETF Daily Notes, will basically take you through everything that I'm looking for that day, or maybe the most important concept that I see that day. For instance, recently, the most important concept that I see is that traders don't get themselves hurt during this period when negotiations between Greece and the Eurozone are really in their kind of endgame marathon session period. Because at that point, it's essentially like making the statement, I don't think you should go dancing in a minefield, because it looks like you can do the same thing you normally do, only in this case, every third step you may step on something that changes everything. And there's no way to predict that. There's no way to see it coming. A headline can hit that the deal is off, or a headline can hit that the deal is on. And there's really no way you're going to see that in the charts. There's no way you're going to see that when you do your underlying fundamental analysis. Whatever it is you see as your edge on the markets, it will not in any way contribute to you being able to predict that event. So the trade for me right now, I've got a short in the bond market, and that's it. And I'm trying to do very little, because when this does resolve, there's going to be some tremendous opportunities, and the worst thing you can do is get yourself hurt right before those opportunities start to become easy. So the ETF Daily Notes, I'll talk about concepts like that, and I'll also highlight other concepts I'm talking about with the macro chart book, which is once a month, where I get a much more in-depth view, top-down. I generally cover various currency markets, commodity markets, the U.S. equity indices, and other markets around the world. And then the other side of what I do, the real-time trading, that's posted on our in-play, the streaming side of the service. I'll do that under the chart ticker, C-H-A-R-T, and this is where you'll see the specific trading calls. Again, they're all made with the market, the instrument, the price, the stop level, exit calls, and just general observations. So that's kind of the two segments of what I do. And I just want to show you a couple of quick examples of how that basically plays out so you get a sense of how to put this all together. Here's an example from a few weeks ago in crude oil. We had a roaring market to the upside, a trend where the market had moved something like 45% in 6 weeks. And I came into the day, the previous day I said, I thought that there was going to be a short setup here. The next morning I said in my ETF Daily Notes, there's inventory data this day. I think that we may see a good number finally. I think the market's been running into that. However, if we do, that's probably going to eject the rest of the short interest and give you the short setup you want. So in other words, we kick out those weak hands, and finally you can start to fade this. Then during the day, we got the inventory data. I put out the call, turned out to be right at the highs, and we were able to kind of follow that down, take it over 2 days. I followed it up the next day in the ETF Daily Notes, basically putting a chart that you see there. That chart was the day after we put the trade on. The green zone that you see drawn on the chart is where I said I think this is the target you want to look for. And then in real time, that's where it went, and we were able to post the profit target. So obviously, that was a perfect way for that to go. But that's how, just so you know what I'm doing when I'm posting stuff on the site, this is what I'm shooting for. This is how I want to be able to interact with you. Here's a larger time frame example. This uses the chart book. In the April chart book, I basically said there were these different possibilities. And I see a note here. Yeah, for the crude oil trade, I did post this with an ETF as well. USO would have been one to short. There's also ones that you can buy. SCO, DWTI offer inverse ETF opportunities. And basically the way that I did this one was I suggested a number of different possibilities, and I think my colleague Damon also followed up saying the same thing. Here's another ETF you might use to do this. So when we have a call like that that looks especially like it may be something really significant, we'll try to find every possible way to put in front of you how to play it, for sure. So going back to this example, in the April chart book, I basically outlined 3 possibilities for everything to go, and then as we started to get toward May, I started to get, about midway through the month actually in April, I started to get really convinced that the way that things were going to turn out was a move higher in interest rates. Talked about that quite a bit and how to do it with Treasury bond futures, or you could do it with TLT. And to this day, I update all along the way, whether you're in ZB, which is the 30-year bond futures market. We rolled that into September a couple weeks ago, or you're in TLT short. Either way, you're sitting up significantly at this point, and I'm continuing to say, stay with it, because I think that right now, what we're seeing is an environment where people are having a tough time acclimating to the idea that there's maybe going to be an accelerating global growth picture that's kind of creeping up on us right now. And interest rates are front-running that shift. So, to sum up, 3 basic sides to things here to follow what I do on the site and make the most out of it. There are webinars. I've done about 5 of them. They talk about my approach, the reasons I make the decisions I do, as well as how to use the instruments I use, and that's all going to be on the Briefing YouTube channel. Then there's the ChartTrader, trades and analysis posted in real time, as well as just basic observations during the day. And then there's the kind of perspective and analysis outside, the ETFXX stuff, which is really just the kind of, trying to arm you with the concepts, the ideas, and the charts, the big picture shifts that I see as being kind of the menu of what's an opportunity right now. And, so that's the ETF Daily Notes every morning, as you see, about 15 minutes before the bell, in the chart book, which is about a week into the month, usually just after the first jobs report. The following Monday in the evening, I'll post that one. And so that's pretty much all I got, and I'll kick it back over to Brett.
Okay. By the way, I sent out a note in the chat. Please feel free to send in questions using the chat function at any time, which is the bottom left corner of your screen. So I'm going to go back to my desktop. All right, so from the ETF Daily Notes, in terms of the website, this is where Brett is posting his commentary, as he just mentioned. Recommend from here, go to the TA page, scans page. This is written by Scott Smith, trades under the ticker BLUEX. I'm going to hand it over to Scott, and he can talk a little bit about what he does.
Thanks, Brett. So my name is Scott Smith, and I'm a senior technical analyst here at Briefing.com. And I've been trading both full and part-time for over the last 15 years, since the late 1990s. All of my commentary and analysis can be followed underneath the Blue Chip Trader or BLUEX ticker on our trading service. Generally speaking, I tend to favor being a swing trader, which means I hold a position from anywhere from a few days to a few weeks for as long as it continues to work in my favor. I do want to point out, though, that I do scale out of profits when price does start to move in my favor, usually 1 to 2 or 3 points. I do this mainly to reduce my overall market exposure, as well as to raise some capital for the next opportunity that I see setting up. For those of you who are interested in trading options, I typically will provide some sort of strike or option that's to participate along with that if you have a smaller account or you're just generally interested in trading options. It's usually something that's typically in the money and it has a pretty high delta, so it is going to move on par with the stock price itself. So due to the shorter term nature of my trading, I definitely tend to be more focused on the technical side of things as opposed to the fundamental or economic data that's out there. I spend a majority of my trading days just drawing trend lines along key support and resistance zones on hundreds of charts and setting price alerts on my trading software. Just before I go to this TA scans page, I do want to point out that under perspective, there's a column here called Swing Trader. And I update this page about once, maybe twice a week, depending on how I see market conditions developing. And this is always going to be just a general, my general broad view or opinion on the market, mostly focused on the 9 key S&P sectors, their relative strength and relative weakness, as well as the S&P and whether it's short-term overbought or short-term oversold, and what the type of market conditions are that we're currently seeing, or how my trading's been going. If I see a specific sector that I like, I will highlight that as well. But generally speaking, you should just kind of look at this because it kind of provides like a broad, a strategy of how I'm approaching the market. To get to more of a tactical approach to the market, I want to go to the TA page scans. And so once I've established a broader theme in the market of what sectors I want to participate in, or if the market's overbought and oversold, well, then I want to come to the TA page scans, which I created about 10 years ago, and it was basically as a shortcut for finding specific stock patterns that I've basically loved trading. And they're nothing crazy or new. It's just your typical textbook pullbacks in uptrends or pullbacks in downtrends, maybe stocks that have run up for 3-4 days in a row, breakouts over significant resistance or breakdowns below key support, stocks trading at popular moving averages like the 20 days or the 50-day or 100 or 200. Just kind of like your basic technical analysis. They are focused on stocks that trade over 1 million shares and also have an average daily range greater than $1. So it's going to be your higher, more liquid, more momentum plays. The key thing about this page too is in my analysis, what I've noticed over the years, it's not specifically the setups, because those are just mechanical computerized setups that get spit out each night. But what I've noticed is that you can actually get a really good feel for the market just by watching whether there's more bullish or bearish setups on this page, or even more neutral ones like the inside day or the doji weeks or doji days. Or tight consolidations is another neutral setup. And just by looking at seeing, are there more bullish setups or bearish setups, again, that helps you approach the market with an overall tone or bias each day, and you kind of get a feel for whether you should be leaning long or short. Another good one that I actually look at a lot is the number of wide range breakouts compared to the number of wide range breakdowns. And if you look here for today, you can see that breakdowns picked up yesterday significantly. So that's a reason maybe why the market's going to start faltering a little bit here this week. And maybe you want to be focused a little bit more on the short side, or at least pull the reins in on going long. You can also see there were more short setups setting up for today as opposed to long setups. Again, maybe you want to be just a little bit more cautious approaching this market. In fact, today, I don't think I've really done much at all, just because I really didn't get a good sense or good feel for looking through these names of what I liked or didn't like. Towards the bottom of this table, I do have some proprietary scans that I came up with the last few years. One of them is called the zippers, and basically that's just my nickname for strong stocks under $20 that are really kind of breaking out of above multi-week, multi-month resistance areas, and they're not your one-day wonders just popping on news. They're kind of these names that are kind of capturing these bids more than 2 or 3 days in a row. And in my experience, they tend to trend for a few days or sometimes even a few weeks above a key moving average like the 10-day moving average or the 20-day moving average. So if that's something you're interested in, I would highly recommend taking a closer look at some of these names. Bang for your buck is just, this is an excellent, if you don't know where to go and you don't know what to trade, day trading on a daily basis or swing trading, these are basically the more volatile names in the market that are trading heavy volume, millions of shares, but they also have an average daily range of greater than $2 or $3. So there's plenty of liquidity here as well as volatility to take advantage of. If you are into that, I would definitely recommend focusing on the 60-minute charts. You can identify a lot of intraday support and resistance levels on them in order to establish some nice scalps or day trades. The last scan here is, again, my proprietary trend signal that I came up with on the SPY alone. And I don't use this so much as a signal just to go long or short the market. You can see the breakdown here. Is green is obviously bullish momentum, yellow is neutral, and red is bearish. But I really do use it more as a money management tool. I know when it's green, I can be trading full size. When it's yellow, I'm going to be a little bit more cautious and maybe cut my position size into just half of what I normally trade. And then when it's red, I know I can be more aggressive on shorting opportunities and less aggressive on bullish opportunities that are developing. It's just a really nice signal. It's based upon a lot of the whether we're positioned above or below prior week's highs and lows. There's MACD indicators in there. There's some moving averages, but it does a really decent job of capturing the overall momentum and bias tone to whether you should be, more focused aggressively short or long in the market. And I guess that's really what I'm trying to get at in all of these is you kind of have to know which way the market is favoring each day and each week in and out, and which side you should be adjusting for in order to make money, as a swing trader particularly. The last column I want to show you that I also update on a weekly basis is the liquid momentum focus list. So we came up with this list about 5 or 6 years ago, and it's what we consider to be the top 50 leading stocks in the market, according to our scans for relative strength, liquidity, and volatility. You can scroll down further to see the actual list of our 50 stocks. It's updated every weekend. They don't change too often. I think you're going to find, usually less than 10 stocks go in and out on a weekly basis. Some of them will come off and just go back on the following week just because they slip right outside the top 50 ranking. But the reason I want to point this out is since these are the strongest stocks on a relative strength basis in the market, they tend to perform extremely well to just the most basic of technical analysis applications. Whether you're using a stochastic or a RSI or even just a simple moving average, they react very, very well to 20-day moving averages or 50-day moving averages. These are really great swing trading opportunities. You can see whenever price holds this red line, which is the 50-day on this chart, they just tend to attract bids. And the reason being is that their relative strength, they're outperforming the broader market. When you have stocks that are leading the market and outperforming, there's always going to be institutional money that's flowing into these names to defend them because those are the winners. Those are the ones that boost your portfolio. So they act very well to just basic technical levels, basic candlestick patterns, bullish on the bullish side. I do want to point out, though, when they fail, when they do break below a 50-day moving average or a significant trend line, a good example is this WBA, W-B-A, that I posted last week on Monday. It began to break below this key support level, break below the 50-day moving average. You want to take additional cautionary measures when you see such of these things. I wouldn't recommend shorting them because these are the strongest stocks unless you really know what you're doing. But they tend to, if they do fall beneath the key support zones, you really want to kind of avoid them. I believe WBA is actually sinking down to the 66, 67 area today, this week, as the selling pressure continues. So again, this is just a really nice area if you want to be focused on swing trading opportunities. I believe there's options on all these as well. If you want to do covered calls on them, there's another great strategy. If you like to play breakouts, I would recommend really kind of just focusing more on just your basic identifying the key zones, support zones, and kind of taking advantage of that with just your basic approach to trading. And again, if you could tie this into the strategies on my swing trader column, as well as if you can ever find one of these names showing up on the TA page scans, I mean, those are the names that I focus on the Blue Chip Trader. I'm always going to be looking out for names that are leaders on the liquid momentum page and show up on the TA scans page. That's basically almost like an automatic trade for me. So with that said, I'm pretty much going to wrap it up here. and I'm going to pass things on to Brett.
Thank you, Scott. One thing I want to point out is we realize that there are beginning traders, in the user base on Briefing Trader. So if there's any terms that the guys use that you aren't familiar with, please email briefingtrader@briefing.com, and we will get back to you immediately, or use the feedback button. I will show you the feedback button because I'm going back to the Talk to Us button, rather. I'm going back to Dual in Play to talk a little bit about how to use this page. And this is where all the live intraday commentary is, all the trading calls. This is the Talk to Us button right here. So if you don't understand one of the terms that Scott used or Brett used, or maybe you wanted a suggestion on what the ETF was, the best ETF was to play copper, put that question in here, put your email address, and we'll get back to you, or just email briefingtrader@briefing.com. So we recommend you use Dual in Play because it can be filtered. The preset when you log in for the first time is everything on this side and then only the trading calls on the other. But I will show you right now how to modify that if you want to go back to that view. This All Topics turns off everything, and it won't let you do that because you won't see any content. But all the trading calls, I hit OK. You'll see the display update, and now we just have the trading calls in here. So the page can also be filtered by portfolio. So you can set up a portfolio here by clicking on Go to My Portfolios, or you go to My Manage Portfolios and Emails up here. It goes to a screen. Click the Get Started button, name the portfolio, and then go through a series of simple steps to create a portfolio with a list of tickers. That portfolio can then be used to filter live in play further down by clicking on the portfolio and then updating the page again. So if you this portfolio mine has 12 tickers in it, and it's my portfolio. Now if I click OK, it would only display trading calls on my 12 tickers. There's probably none today. Oh, there's a couple. So that conducts that filter. And the reason that showed up is because I have yield in my portfolio. And Damon has tagged these two comments with yield, as we can see right there. So let's talk a little bit about custom tickers. You may be familiar with them, but custom tickers are something that I came up with, I think, about 14 years ago. And it's a way, they're ticker symbols that we have in our database that correspond not to a given equity, but rather to either our trading analysts. So you see BLUEX is Scott, Chart is Brett, SCALP is Damon, or topics. And those tickers can be used in portfolios. You can use the search button to search by them. So if I search for SCALP, I'll get all of SCALP's trading calls and thoughts. And also the portfolios, I should mention, can also be used to create alerts. And that, once you create your portfolio, you'll go into a section where you can use those portfolios to create alerts. A group of our users on Trader will actually not log into the site very often. A lot of them will create a portfolio with, say, Chart, BLUEX, and SCALP in it, and then maybe also some equities that they're interested in, and just create live email alerts, and they'll monitor those live email alerts for when a comment from SCALP or from Scott, BLUEX comes out, they'll use the email interface to interact with that content and then make trading decisions on it. And that's a little bit on the functionality of the service. I'm going to turn it over to Damon in one moment here. I just wanted to see if there's any questions really quickly. Or not. So I'll hand it over to Damon.
Hi, thanks for joining us today. My name is Damon Southward. I write under the ticker SCALP and also Yield. I've been trading for almost 20 years, and I started off as kind of a hyperactive day trader during the internet boom. And over the years, I've shifted strategies and styles. And while I still trade actively intraday, I also incorporate a couple of different strategies into my approach that have really helped improve my overall performance and consistency over the years. I'm not sure what, everyone has different situations and different mindsets, but for me, one of the issues that arose is over time as you become a successful trader, you just don't need to really use all your cash. What do you do with your cash that you've generated? You don't necessarily need to have it in positions all the time, volatility or trading related positions. And so one of the ways I've, addressed that issue is by adopting a income strategy. And with this strategy, I purchased quite a few preferred stocks and senior notes and also invest in some distressed situations. But the ultimate goal is to generate income of 10 to 20% per year between income and capital appreciation on strategic purchases. In order to find the ideas that I'm creating on the income side, you can plug in the custom ticker Yield, Y-I-E-L-D. And I've found over the years that this type of information really appeals to individuals that are retired, money managers, people with just high income individuals in general. And because the idea of picking up 8-10% yield on a particular security and with opportunity for even additional upside with capital appreciation is really compelling to a lot of people, including myself. So if you look at the portfolio that I'm currently running, CC Scalp Trader Swing portfolio, in my updated positions I have scaled into a kind of a momentum name. This is a individual stock position. You see I've added 1,000 shares of this senior note, which yields 8.5%. And if you go down, you'll see my entire yield portfolio. So the first position is a company called Memorial Production Partners, which is an upstream MLP. And we purchased this at a 17% yield, which is, I think, compelling for most people, and have picked up about 20 to 30% in capital appreciation, 30% at the peak. I think we're currently up about 20%, and the yield has been bid down to about 14.5%. And this is my way to participate in the recovery in oil prices long term, not only receiving capital appreciation, but the opportunity to participate in increasing distribution. So that 17% yield over time, as this company goes out and buys new assets in the oil and gas sector at discounted, distressed prices, they should be able to grow their distributions over time. So something that was purchased at a 17% yield, as it appreciates over time, that yield gets bid down, but the distribution growth will allow you to capture even stronger yields over time. Diana Shipping is another, is the senior note that I mentioned above. Travel Centers of America is another senior note. TK Offshore Series B is a preferred stock. And with each one of these particular securities, they can be purchased through a regular brokerage account. A lot of people, when they think of fixed income securities, they think you have to have some type of special account in order to purchase them. But 95% of the stocks, the instruments that I highlight, the yield instruments that I highlight, can be purchased through a regular brokerage account. With the preferred tickers in particular, they have a special ticker series that you just need to know how your online broker designates preferreds and senior notes. And once you figure this out, then you'll kind of know the routine in terms of how to locate these securities. Oh yeah, so everything in the portfolio, I provide updates. So with each one of these positions, I'm still long. Pretty much all of them have appreciated relatively meaningfully. Currently, the one that I'm still actively buying is the TK Offshore Series B. And I noted when I purchased it that I thought it could decline in price some simply because interest rates were starting to tick up. And so the initial purchase was made at about an 8.5% yield. Now the yield is around 9% as the security has declined slightly in price. So I'm still a buyer of this security. The 9% yield I find extremely attractive. It's also taxed at a lower tax rate because it's considered qualified dividend income. So I find it to be a very attractive security. And if you want to, look at the comments, the full profile that I've written on this, then you can scroll down a little bit, and here's some of the other names that I've highlighted in my positions. But here is the profile, and it gives a lot more detail on the security. And if you click here, there's a more detailed profile as well. So one of the things I really want to point out, I think, is really an important part of the Briefing Trader website is the style guide. You plug in the ticker STYLE. You'll see the trading methodologies of the various traders on our site. And we currently have 9 traders contributing to the Briefing Trader product. And I think this is significant because each person has their own individual style. And the reality of the market is that there's no one particular style that works all the time. So it's important to be successful long-term as a trader. There are periods in time where you literally have to step back. The style that you're trading, no matter what it is, sometimes it's just not going to be working. It's going to be out of favor for a certain period of time every year. And the people who don't have the ability to adapt and don't have other types of strategies to take advantage of the market or aren't disciplined enough to step back, they will lose their account, and they will blow up their account, and they won't be successful. So one of the values that you receive out of Briefing Trader is you have individuals who are trading a variety of styles, and there's always one of our styles, usually 2 or 3, possibly 4 styles that are working at any particular time. So if, for example, I'm trading, intraday or short-term trading momentum growth names, and that is out of favor at the time, I can take a step back, and there are 8 other guys in there who can fill the void. And usually 2 to 3 or 4 of those guys are hot during that period of time. So that's one thing that's really important that you probably won't find many other places. I think most trading-oriented websites, they're going to have 1 trader, maybe 2, and those 2 traders are probably going to be trading the exact same style. We're trading income, we're trading commodities, we're trading futures, we're trading options, we're trading blue chip stocks, we're trading momentum growth stocks. Just all the way across the board, distressed, a little bit of everything. So even if you feel a little intimidated about trying to participate in some of these areas that you haven't traded before, there's an opportunity to learn. Every comment that we write is archived, and you can look back and see what everyone said over the past 5-6 years about anything. So there's really an opportunity to learn You're not here by yourself trying to figure it out by yourself. I mean, we've made the mistakes for you. Most of these guys have been trading for 10, 15 plus years, and so take advantage of of the work that we've already done, and ride along with us and see what we have to say. And so with the style guide, I mean, you can look back and look at Commodities Trader. Relative Value Trader is our latest addition to the team. And just as an example, Relative Value Trader put out an idea a few weeks ago, and I love the idea. I mean, I wouldn't have known about this stock if not for Relative Value Trader. Read his profile, bought some myself, did really well. So, we're not just throwing out ideas against the wall and hoping they stick. I mean, we actually use the site as a resource ourselves for our own personal investing. And the stock that Relative Value Trader highlighted was BZUN, in case you're interested. And so his approach, really, one of the reasons we added Relative Value Traders, we were trying to find someone, and he's been working at Briefing probably 6 or 7 years and working on portfolios in the background. And based on his performance of idea selection, we thought it was time to promote him to the trader service. But his type of strategy appeals to that individual who doesn't sit in front of their screen all day, who may have a job and only wants, say, 1 or 2 compelling ideas per month that they can sit in for several quarters, and they're looking for 30 to 60% plus types of returns on an individual idea. So I don't want to take up too much time here. If you have any additional questions, we'd be happy to answer them in the Q&A. As well, as Brett pointed out, we do have this Talk to Us feature, and you can ask us questions anytime during your trial or while you're on the service. We probably receive 50 or so comments per day from customers, and we look to answer every one of them. So don't be shy about reaching out to us. Okay, thank you.
Okay, I am going to open up the floor to any questions anybody might have. And if you have a question, please let us know. Okay, well, I'll close then, as no one sent any questions in. But thanks so much for attending our webinar. After you said that, they hung up.
Oh.
They logged out.